Hello, everybody. Thank you for everyone joining us today. As you might have already seen from our announcement last month, we had a fantastic first 6 months of this year. So just to summarize, our H1 2023 year-on-year turnover increased by 85% to £37 million, and our year-on-year EBITDA increased by 73% to £1.1 million compared to H1 of 2022. In today's presentation, we will talk about our performance over the last 6 months, and we will also share our future growth plans for the future with you as well. Just to give you a brief introduction for our company, Hercules Site Services PLC is a technology-enabled labor supply company operating in the infrastructure sector. Next slide is our disclaimer, and this slide is about third slide is about our board members. I'm Brusk Korkmaz, I'm the CEO for Hercules, and today I'm joined by our CFO, Paul Wheatcroft.
Hello, everybody.
As you can see from this slide, we've got a very strong and well-respected board with both exec and non-exec directors, with great blend of experience in infrastructure, financials and banking, sales, PLC, governance, and even starting and running an AIM-listed company. Together, we believe that we can grow Hercules even further. The next slide is about how Hercules operates. As you can see at the top of this slide, some of our blue chip clients we work for in the infrastructure sector. As I mentioned before, we are mainly a labor supply company working for blue chip infrastructure companies and complemented by our construction services division. Our labor supply department is a significant part of our business, which currently contributes around 80% of our turnover, and this number is still growing. Recently, we have added 2 new divisions under our labor supply business, which are our white-collar recruitment and our site security divisions. Under the construction services division, we hire out our suction excavator services, and we also carry out civil projects under the same umbrella. As you can see at the bottom left corner, we also developed our apps in-house, and our Hercules recruitment app is the first one that helps us to recruit local labor for local projects, and our One Team app helps us to onboard them efficiently in a paperless process. At the bottom right, you can see that we have developed a portal called See Everything Portal, which stands for Skills, Education and Employment. We have developed this product for our clients on the HS2 Old Oak Common Station project, and we already started licensing this product out, bringing in income. As you can see, our digital arm differentiates us from our competitors and underpins the whole business. Even though we are mainly a labor supply company with these numerous services available, one of our biggest USP we have got is that we can supply all of these services by cross-selling opportunities to our clients under the same umbrella. The next slide is about our timeline. As you can see here, we've got a very strong history of growth. I set up Hercules in 2008 from a family spare bedroom, and since then we have been growing every year. You can see from this slide that there are several milestones that we have achieved over the last 15 years. Just to mention some of the significant milestones, winning the HS2 labor supply framework in 2021 for the northern section with Balfour BT and Vinci joint venture. We are one of the 6 labor supply companies providing labor for this mega project, and we are performing really well there. Even though there are 6 labor suppliers on the framework, and we are one of them, we are supplying 25% of the whole workforce. And you can see that our apps are working really well there for us to be able to find local people for local project and onboard them efficiently. And we are doing that faster than our competitors. If you can move on to the next one, not the next slide, sorry, next milestone. At the beginning of February 2022, we listed Hercules on the AIM market, and this is a major milestone for us. And we are very excited about being listed on the AIM platform, and we believe that this platform will enable us to grow as we have ambitious plans for the next part of our journey. Moving on to the August 2022, last year, we selected a site for our training academy, which is in Nuneaton. This site is very close to our northern section of the HS2, which will help us to upskill and cross-skill our workforce. We believe that we can monetize this opportunity as well. As you might be aware that there is a massive skill shortage in the UK, and we believe that upskilling and cross-skilling our workforce will help us to close this gap. And also we want to monetize this opportunity as well. Our sustainable approach is to find local people for local projects, train them up, put them to work, and retrain them for upskilling and cross-skilling opportunities. And lastly, we have started our 2 new divisions in November. They are the construction white collar and construction site security divisions. These 2 divisions started really well, and they already started bringing some income for our business. The next slide is about our achievements for the first half of the year in 2023. As I mentioned before, we had a fantastic first 6 months for 2023. Turnover for the half year, year-on-year increased by 85%, and we are trading in line with market expectations. As you might remember, our end of year growth was 50% for the previous 2 years. So in a row, that was 2021 and 2022. And we are forecasting similar sort of growth for the year ending 2023. We have seen growth across all of our divisions, and with regards to our labor supply arm, we established, as I mentioned, our two new divisions, which are our white collar and site security divisions, and they are bringing some income towards our turnover, and we believe that these two divisions will grow in the next few years. With regards to our suction excavator division, our fleet grew from 16 to 30 suction excavators. And now we have one of the biggest fleets in the UK, and we will start seeing increased turnover and profit coming in, contributing for this year, 2023 end of year results, because we got 10 suction excavators end of March. So that means our increase and EBITDA will increase in the second year of this year. We have been paying dividends since we got Hercules listed on the stock exchange, and our aim is to pay dividends as well for this year to our shareholders. With regards to our training academy, as I mentioned before, we are establishing our training academy in Nuneaton, and there is a skill shortage in the UK, and it is important for us to have a sustainable approach, which is finding local people for local projects, putting them to work, and upskilling and cross-skilling our workforce. As I mentioned before as well, we want to monetize this opportunity as well. So our training academy plays a very important role in our sustainable approach. So our goal is to open up our training academy by early 2024. So by January, February 2024, we should be opening it up. With regards to our last point, as you might be aware as well, there is an infrastructure and construction. There is So the construction and infrastructure sectors are really, really busy currently, and we believe that it will carry on for the next 15 years with this growth, and we believe that we are placed well in the marketplace. I think next slide is yours, Paul.
Thanks, Brusk. Yeah, so this is our group statement, and after this one, we'll speak a little bit about the main 3 areas of the business. But this just summarizes how our results have changed from the first half year in 2022 to the first half year in 2023. No apologies for saying it again. We increased our turnover by 85% and EBITDA by 73%, which was well in line with market expectations. So we're very, very pleased about that. We've worked very hard to achieve that, and all the team has. Our overheads have grown more from the previous year, and that was part of our plan. We knew pre-COVID that there was going to be some incredible growth in the UK for our business, well, the whole sector, and we wanted to make sure we got our share of it. At that time, before we went on to AIM, we were a relatively small a lean private company. And we needed to change. We needed to build in the management structures, the administrative requirements to get ready for what was coming. As well as that, our overheads have had to increase because the suction excavator service business that Brusk referred to, we started that in August 2020. And every time you get more vehicles and we've been getting, we started with 2 then, and we've now got 30, as Brusk said. The last 10 came in at the end of March of this year. Overheads come along with each one of those. So the good thing is that we've now got the 30. So the growth in our overheads that we've been planning for should now start to flatten out, because we think we've built a really good infrastructure to cover us, not just for the growth in this year, but at least the next year or so ahead. The only thing that would change that, of course, is if something structural in relation to our business, like M&A or anything like that came along. The depreciation relates again to the suction excavators, as does the finance cost. They're all purchased on conventional asset finance, 90% funding over 7 years at fixed interest rates. So our PBT was 0.4 after tax, sorry, P80 after tax at the end of the first half year. And we're very pleased with that result, well on course for what we've told the market this year. If we just separate out labour supply, which is the biggest part of our business, that's been a whopping growth, 110% in revenue. And that's really not a number of different projects have driven that. Yes, the HS2 Northern section is a big part of that. And Brusk has already said that we're doing so well. Even though there's 6 suppliers on the labour desk, we're supplying 25% of the requirements. And we're very pleased with that. We've got a great team putting this together. So we've got this organic growth coming through, and that's what's been driving us for the last few years. We've not done any M&A or anything structural yet. So it's all organic growth so far. And we've got a strong project pipeline. We keep gaining new clients, and that's really important in all areas of our business, because we want to work with all the blue chip companies. And every 6 months goes by, we get some more. So John Sisk and CHC Highways and the highways element of Galliford Try, they all came along as new clients in that first half year, which will really pay dividends in the future as they start to utilize our services to a greater degree as well. We think we're well on the way to getting about 1,000 operatives out on sites, and that includes HS2, the northern section. And we do very well with this. Brusk mentioned we've got 2 apps. One's the recruitment app, one's the One Team app. The recruitment app is the interesting thing. When we took this snapshot, we were, as you can see, just over 9,600. I think we're about 10,000 now, and that's growing. We've also, because we want to be a digital tech-enabled company, we want to be efficient. The One Team app allows us that once we found the operatives and we want to get them onboarded, we want to do it all digitally without paper. We want to do it instantly. So I think we're around 80% and growing of everybody who comes to join us. They come via this onboarding, and our aim is to get to 100% within the next year. That's important because it helps us keep our costs down, and it shows to everybody who can see us how tech-enabled we are and how we're differentiated from our competitors. Finally, labour supply is our biggest part of our business, as I've said, and these guys need to be trained. They need to be retrained. You can't just train them once. Every 3 to 4 years, depending on what their skill is, we have to train them again, and we take the opportunity to upskill them and to cross-skill them wherever we can, and that will be even more efficient come the training academy, as Brusk was explaining. That's going to open in January or February, so that will allow us to do that training ourselves rather than go external, save costs, as well as offer those same services to other people in the marketplace and gain an additional income source. Suction excavators, that's a picture of the front cab of one of them. They're basically Mercedes chassis with, depending on what generation you come from, either a really large Dyson or a Hoover on the back of it. They're in demand all over the world, and this is because they're safe. The reason that people use suction excavators is to dig safely around services underground, because if you hit a service with conventional digging, you can cause delays, you could hurt somebody, or people have died because of accidents in this space. And the penalties, contract penalties for delays, are very, very expensive. So more and more and more so, all our major clients are wanting to use suction excavators. So it's really strategically a very nice addition to the services of labour supply and civil projects that we offer to clients. You can see here that the turnover increased from 1.5 to 2.2 across the 2 half years. Again, that's because we've been having deliveries of these suction excavators through the timeline since August 2020 through to March 23. Probably about the last 10, in fact, probably 12 of them didn't show any revenue at all in 2023 half one, because they came so late in the month. But they will. We expect them obviously to show the benefit to the company in revenue and operating profits in the second half year and beyond. Same thing here in relation to new clients. These are really important moves for our suction excavator team. Skanska on the M42 is a big project. Amy, 80 Webb's Fleet, these are all major projects with major clients who we will work with again. We build these relationships and we push them and we develop them. That's how Brusk has built the business since he started it 15 years ago, and that's why we've been so successful. Finally, we I think 2 out of the 30 that we've got have something called triple fan technology. Without getting too technical, because I'm not technical, they basically have the power to dig even deeper with more power, and more our clients are requesting that for difficult sites. There aren't many people out there with this technology, so we're hoping to gain some premium pricing from that in the years ahead. Civil projects is the last one of the 3 major areas of the business. And this is where we do fixed price projects, mainly in the water and sewage industry. And we heavily get our work from the asset management program, which for those people who are familiar with it is currently AMP7. We increased our turnover 30% year on year in that first half. And the really, really good news story is that we've got projects in contract for this year. And again, this is probably out of date from when this slide was done. We had 10 million. I suspect it's nearer 12 now. But we had that in. We know that work is going to be done in this financial year. We actually achieved 12 million in the full financial year last year. So we would expect to at least match that, but probably, hopefully, get a little bit more by the end of the year. Again, new clients important. Amy and SGN have joined that list in the first half year, and more are on the way. It's a very busy sector, but we're very careful in terms of the projects we choose. We're looking for the higher margin, low risk projects to manage our overall risk in this sector. It's only a relatively small part of the business, and we intend it to stay around that level, just small increases each year. We're never going to be a major civil projects player. That's not our plan. Quick word on the balance sheet. Our balance sheet obviously has the suction excavators in them, and they're quite expensive. They're between 400,000 and 500,000 each. They've all been bought at different times in the last 3 years. We've also capitalized our leases for our various buildings. As you know, we're under IFRS because we're a public company. Our current assets are the debtor book, the work in progress on the civil projects. And as you expect, that's increased year on year because our turnover has increased so dramatically. In terms of liabilities, forgetting the split between current and non-current for a minute, about 11 million of that at the end of March was our ID facility with Investec, and about 6 million, I think, was the leases, and about 8 was the ID facility balance at that time. So 11 million on suction excavators, 8 million on ID, and 6 on leases. That makes up our liabilities. Those liabilities, the asset finance for the suction excavators, that's debt that's heavily backed by very valuable assets. These assets can be sold for probably near to the price we paid for them if we wanted to, anywhere in the world, because the ordering time is between 12 and 15 months and the demand is huge. That's a bit on the balance sheet. Cash flow, we've obviously in January we got our some more cash was raised by a fundraising activity in January, which most of you will be aware of. That raised £1.6 million. We ended that half year with 2.6. Similar period last year was 1.6. I think Brusk has already referred to it. It's very important that we are fair to our shareholders. That's our plan. We paid dividends as soon as we got onto AIM. We paid another final dividend in March, and another interim has been announced and is due to be paid in August of this year. Brusk, back to you.
Thank you so much, Paul. As you can see from this slide, we are strategically well placed in the market to benefit from UK government's continued investment in the infrastructure sector. If you look at the first bullet point, I'm just going to read it because these are the facts. 2021 National Infrastructure Construction Pipeline sets out nearly £650 billion of public and private investment over the next 10 years, of which £200 billion of it is to be invested by 2024-2025, supporting an average of 425,000 jobs yearly. Second bullet point states that estimated 217,000 new skilled labor required in UK construction industry by 2025. And the third one, there is a huge investment being made in the Hercules' core markets in the next 5 years. 22 billion pounds for HS2, 17.5 billion pounds for the railway, 27 billion pounds for the strategic roads, and 525 million pounds to bring forward development in the nuclear power. As you are aware, in the last budget as well, the government has recently classified nuclear energy as a green energy, so more investment can be made, so we are self-sufficient with the energy production in the UK. The last bullet point states that there is a labor supply is on the industry's agenda. Demand is close to 20 years high, compounded by demographic change and Britain's exit from European Union. So companies like us are expected to employ local workforce. As you can see from these 4 bullet points, there is a huge investment being made in the infrastructure sector, and our clients require people to build these mega projects. And also there is a skill shortage in the UK. So this is where Hercules us come to the equation to help our clients to deliver these mega projects by our sustainable approach, which I mentioned before, which is finding local people for local projects by using our apps, then training them up by utilizing our training academy, then putting them to work as we are a labor supply company and we are good at it, and retrain them for upskilling and cross-skilling opportunities. We believe that this sort of approach is important for our industry and for our country. Lastly, we believe that our competition is traditional with privately owned companies, and they do not offer different services like we do. So our clients like to use different services from us as a one-stop shop. The next slide is about our growth strategy. As you can see from this slide, we got multiple growth opportunities for our growth plans. The first one is the organic growth across all divisions through a strong pipeline of projects into second half of the financial year 23 and 24. With regards to our training and training academy, we want to upskill and cross-skill our workforce, but we also want to monetize this opportunity as well. White collar and site security divisions, as I mentioned, we have got one manager running each division, and these guys are doing really well. They're really good managers, and we started seeing some income coming into this year's accounts, and we want to increase the volume in the next few years with regards to these 2 divisions. With regards to our digital division, as I mentioned before, we have developed a C portal and we started monetizing this. And we want to push our C portal to blue chip companies and other projects as well. With regards to the suction excavator division, we have got 30 suction excavators now, and we want to, as Paul said, we want to maximize the benefits from that. We want to make it really efficient and make it more profitable, which current numbers showing that it's going in the right direction. With regards to the subsidiaries and partnership approach, this will help accelerate our labor supply growth into new geographies and into new sectors by partnering up with ambitious managers. This approach is found by the Mighty PLC. You might have heard Mighty PLC, and they grew really fast by adopting this approach. We believe that this is going to help us to increase our labor supply into new sectors and new geographies. Lastly, with regards to our M&A activity, we are already talking to identified acquisition targets in the labor supply sector. Sorry, we can't tell you very much, about that as confidential so far. But we are talking to companies with synergies to help us grow our turnover and our profitability in different sectors, but mainly in the labor supply sector. This is our last slide. So why invest in Hercules, as there are over 1,000 companies listed in the London Stock Exchange? We believe that we've got a really good investment case and a fantastic story. As you can see from the first bullet point, we've got a sustained record of growth. As we mentioned before, Hercules have been going over the last 15 years since 2008, and we have been growing year by year. We got positive performance across all divisions, and strong momentum has continued into 2023. We also have got significant cross-selling capabilities between all of the divisions. And there's a huge market opportunity, as we mentioned, in the infrastructure sector, with the HS2, with the regional development programs, as well as nuclear energy investment and sewage and the water treatment works. As you are aware, that government recently announced £10 billion to be invested in our infrastructure sector. In the water and sewage treatment works, so the sewage doesn't go into the sea. You might have maybe read it recently. So this is our core market, and we believe that there's a huge market opportunity for us to grow every year for the next 15 plus years. And last bullet point, we have got a defined strategy with multiple growth opportunities. Thank you so much for listening to us, and if there are any questions, we are happy to take them. So thank you.
Maybe the first one for you, Paul. Could you just clarify whether the new suction excavators that you've taken recent delivery of are now actually on site and operating? And approximately what is the average term of use? Will clients take them for days, weeks, months?
Yeah, so the suction excavators, they have quite a good life. Historically, older items, there's ones that we know about are out there still operating 18 years on. Ours are still relatively new. As we said, we only got 14 of the 30 we've got a couple of months ago. So they're very new, and ours are pretty much the state of the art. They're the widely acknowledged to be the best ones available in the world. We've not gone for cheapo items, so to speak. Mm-hmm. So we expect a good long life out of them. And in terms of utilization, really that just normally takes us a few months to get them up and running, to get the people trained, to get them out there, to get that, make clients aware that we've got more of them, because there is a big demand, and we'd expect in the summer months to see quite a bit more of that.
And so just returning to the question, are those new 14 already deployed?
Yes, they're all deployed. They're all out on. They're never. None of our 30 suction excavators are out 100% of the time, because they have to come off to be cleaned, to be serviced, and so forth. But yeah, we're making those available to clients, and the utilization is increasing.
Good, they're out earning their corn. That's good to hear. Now, perhaps one for you, Brusk. Bigger picture question. Are you as a business seeing any signs of slowdown in your activities? Because obviously there are a lot of concerns about the UK's economic backdrop and the threat of recession, or is Hercules proving immune to those?
So at the moment, there are no slowing down signs, Andy, and really good question, by the way. We believe in the infrastructure sector because we don't work in the housing, we only work in the infrastructure sector, and there are already committed investments such as HS2, and we are working in the northern section, and there is going to be also the government approved another section to go ahead from Birmingham to Crewe. That is going to be the HS2B section, but that's going to happen in 2 years' time. I mean, we weren't going to start that anyway, but that is going to be our, starting from our section onwards. So we will be involved in that project. And there are also regional development programs as well as nuclear energy. So you cannot stop any of those. This is good for the country. And if we are going to have a net zero, targets, we need to have nuclear energy. That is the only way that we can really have sustainable energy produced in this countries, and we believe with the investments in the AMP period, which is asset management program AMP7 and AMP8, stopping the sewage going into the water. These are necessary projects and they have to be done. So we believe that we are in the right place, right time, and we believe that next 15 years we'll be busy in the infrastructure sector.
Yeah, good. Well, you've given me a perfect lead into the next question, Bruce. Thank you for that. As you mentioned, these are 10 to 15-year long-term contracts, but we do have a question. It seems quite likely that we might get a change of government in the UK. But is that likely to disrupt those long-term infrastructure spending, or could it be a negative, or could it be a positive for Hercules?
I think there is already a strategical sort of acceptance from any government that comes onto it that infrastructure is going to carry on because it is a must for the country. I mean, whoever comes onto it, a Labour or a coalition or whoever different than the current government, they're also supporting the HS2 and nuclear energy, and that is the best for the country. So there's a mutual sort of agreement in the infrastructure sector that needs to sort of carry on for the country, really.
Good. And a slightly related theme, you've mentioned Thames Water is an important client, and they've been very much in the news lately and have raised some capital as a short-term rescue plan. But if they were to become nationalised, how might that affect your work with them?
So either way, the amount that sort of we are given as a work-wise is given by Ofwat. It is not Thames Water's own money. It is by Ofwat. So Ofwat gives Thames Water and other private utility companies a certain amount every year for them to upgrade their current sewage and water treatment network, as well as build new ones for the new areas if they are too old. So that amount, that we are sort of working with Thames Water, Southern Water, Anglian Water, the four sort of our clients, they are spending Ofwat's money, which is the taxpayers' money, if it makes sense. So either way, whatever happens to Thames Water or any other utility companies, we will not see any problem with that, because that is taxpayers' sort of money that is spent on a necessary projects that has to be built.
Good. And moving back to the here and now, HS2, as you mentioned quite rightly, is a very exciting and successful activity for the group. Could you give an indication when you think the revenue peak for HS2 in respect of Hercules might come, and how many people do you think you might have deployed on that contract at that peak time?
Yeah, sure. We've got around 400 people, Andy, working currently, and we believe that this hasn't peaked yet. we believe that next year or so it will be peak. But there are other projects are opening up, other sections are opening up within the HS2. Some of them are sort of slowed down a bit. So we believe that potentially we might be seeing around 500 people within next year or two. But that is going to carry on, we believe, within the next 7 year plus, because this is a huge project. It is one of the biggest projects in Europe. Actually, it is the biggest project in Europe. So there's going to be, we'll be really busy there. And then the next section is going to start as well, Andy, from Birmingham to Crewe within a couple of years' time. And we are going to be involved there as well. And you might have, you might already know as well, there is a Lower Thames crossing as well, starting in Kent area within a year or so. These are all approved schemes by the government. So we are going to be involved there also. So there are quite a lot of projects coming up.
Yeah, well, it's a very important point for infrastructure.
Yeah,
that they don't tend to be one-off projects. You as you mentioned, we're up to AMP7, AMP8, and HS2 has many tentacles to spread across the country as well.
Yeah.
Looking at your digital offering, which is showing very exciting growth, could you update whether any of your competitors are trying to offer anything similar, or are they still in your rearview mirror in offering this service?
Great question, Andy. And our digital arm differentiates us from our competitors, as I mentioned before. And we don't, with regards to the innovation, we believe that we are far in advance than our competitors with our digital arm. And we are, we got over 10,000 people with our app, which started 3 years ago, I think now. And that number is growing. So we can target certain areas as well. So we change how, when a phone call comes, say, from our clients, we need projects coming up. So we need people for the projects. And then you start sort of, lining up people to start there. But because of our digital arm, we know what projects are coming on. As I mentioned, with the Lower Thames Crossing, we already started building local, our presence with the local people there are applying for the projects. We are getting their information, and so we can put them to work straight away when the project starts. So our competitors do not have anything like we have got, and it differentiates us. So yeah, really good actually.
Good to hear. Paul, maybe one for you here. You referenced the fact that the group had started building its structure and investing prior to the growth that you have achieved. You also have ambitious growth plans. So do you think that further investment in the senior management team is likely to be needed?
I think it's something that we're constantly looking ahead on, particularly when we see major changes coming along. So I think this is what we've done. We don't do it for the sake of it, but we look to make sure we've got the best talents for all the challenging areas as coming up. So I think there will be some additions in the next year, but nothing like the scale that we've made in the last 2.5 years. Most of our structure is there. We're now at the fine-tuning stage until such time as I said earlier, until something more strategic happens.
Yeah, thank you. And having achieved an IPO, which has been somewhat of a rarity in the UK in the last couple of years. We have a question here. Do you think that being a listed PLC has helped your profile when tendering for new business or working with some of the very large partners that you've referred to?
I would say so. Yes, definitely. There are higher compliance checks and higher levels to sort of achieve with regards to the health and safety, compliance, etc. And it gives a more credible as well. And it shows that we are there for the long term, not just for next few years that we want to sort of sell it to a private equity company or that sort of thing. So we are there for the long term to build up our business, and our clients see that, and they want to have a long-term supply chain rather than sort of come and go sort of companies. So we believe that it helped us.
Yeah, and related is obviously you can't name who you're talking to on the potential M&A side, but being listed, having shares as a possible currency, is this something that that might help you on the acquisition front?
I think so. I mean, the many companies go to AIM or the main market with a view to being able to raise funds to grow their business. We were no different in that respect. That's part of our plan. Even though we talk very much about the major projects and the growth in organic growth ahead, we certainly don't intend to leave it there. We want to grow the business and widen our repertoire of services to the market and increase all the main elements that we have. So yes, we would see the market as a source of funds, but it may not be limited to that. There may be other ways that it can be done. I think every deal that we might look at will have to be looked at in isolation and find the best way to achieve it.
Yeah, and we did have a question about whether Hercules itself could be a takeover target for a much larger construction services or recruitment group, which I think clearly if any approaches had been made in a listed environment, we would have been notified of them. But I think I'll turn that around a little bit, Brusk, and come back to you, as you do own 2/3 of the shares and therefore have quite a say in the direction of the company. What are your ambitions in growing the business? And also, presumably at some stage you'd like to reduce your holding, get other shareholders on board, etc.
Yeah, sure. Really good question, Andy. Thank you. When we got IPO'd in 2022, February 2022, we couldn't raise the amount because it was a difficult market. There were only, I think, 13 companies made it to the AIM market then, so we couldn't raise the funds that we wanted. So I was gonna have a lesser sort of percentage of shares that I'm holding. So over the years, the aim is to dilute the shares or sell some and for me to sort of come sub 50s. And I think liquidity we'll have more liquidity in the shares because of that. And with regards to the being targeted by recruitment companies and other construction services companies, our aim is currently to grow Hercules. We are only 1.5 years on the market. So our aim is to grow Hercules as we have been doing 50% for the last 2 years. We grew 50% and another 50%, and this year our forecast shows that another 50% is achievable, and we believe that we are going to do that. And with regards to the acquiring companies and growing as well as the organic growth, our aim would be within 5 to 10 years time to become a £1 billion turnover company with really good EBITDA margins, and we believe that we can achieve it because we got the right people and we are in the right industry as well.
As you can probably tell from that, Andy, Brusk is still a very, very ambitious man and is still quite young as well. So I don't think there's likely to be a takeover in the foreseeable future. Yeah,
well, I shall put a note in my diary for 5 years hence to see if that billion mark has been reached. Right, just I think the last two questions, Paul, I think probably for you. As Brusk has been, you've both been saying the growth rates have been exceptional in recent years, and you did raise a small amount of capital earlier this year to provide the internal working capital to accommodate that growth. So the question is, does that mean another financing round is likely to be needed if you keep expanding at this rate, or is there going to be internal cash flow generation to cover that growth?
I think it's something we always have to keep under review, but our main concentration is building profitability to generate cash, which was mentioned in the question, but also look for other forms of working capital that aren't necessarily market driven. Having said that, if an opportunity came to get more equity into the business, and that could be done in a sensible way, then we would obviously look to do that. But at the moment, our efforts are or elsewhere in terms of a debt provider specifically for working capital, and that's where our current focus is.
Yep, very clear, very sensible. Thank you. And then lastly, Brusk, question: how are your clients responding to some of the newer offerings, such as the white collar or the security services propositions?
Yeah, we are already, if I can just give you an example, suction excavator business, we started in 2020, August 2020. So it was 3 years ago. And suddenly we've got now 30 suction excavators, and we have got quite a lot of, utilization. So our utilization rate is currently around 70%, and we want to increase that to 85%. That is our aim. So you can see that we can cross-sell our services really quickly, very efficiently. So our client, but while we are supplying labor to our site, our clients are asking, oh, can you supply security to the site, or can you supply engineers, project managers, project directors? And now we are saying, well, let's do it. Why not? And this is sort of under the same labor supply division, and it's going really well. I mean the decision that we made was the right one, because we can see in the numbers, and our aim is to grow that arm, those two arms as well.
Good to hear. Nice positive note on which to finish. As a final reminder to all the attendees, you will be able to hear this presentation again. You can find an awful lot of material about Hercules on their Investor Centre on their own website. There has been a very detailed recent initiation research note from ourselves, written by James Tetley, leading support services analyst, which set a fair value on this exciting growth company at 60 pence a share. You can find that note on the Equity Development website, as well as this recording when it comes out. So thank you to the audience, and for a wide range of interesting questions, and particular thanks on their behalf to Paul and to Brusk. And we wish you all the best for more growth of the high rate and velocity you've achieved so far.
Yeah, thank you, Andy, and thank you so much, everyone listening us today. Thank you.
Thank you, Andy. Thanks all.